Okay, morning traders. Hope we're doing well. So, g'day, Bobby. A bit of carnage overnight. We saw the US back off quite hard, which not overly unexpected. You could see the US dollar slowly creeping higher during the day, and Asian markets weren't too good. Our market was surprisingly strong. I find that a big surprise, and I think it's just got ramped up. And I would not be surprised if they dump on it again today. Um, on the open. So it will be interesting. I mean, I can't see why it's going to be supported on the open by people, but we'll see. Everyone can hear me. Am I coming through okay, Bobby? Yep. Just make sure if I keep chatting away. Let me just get myself organised actually. Got that. Jason, g'day mate. Good. So yeah, I don't know. The reasoning behind the strength yesterday. You can see uh, opened up, gapped up, which is about expected from where the US closed or where from the overnight futures closed, and then just kept grinding higher all day. I suspect it was on the back of potential stimulus, which didn't come out last night um, from the US, and all manner of sort of positive news. But I think the problem is people are getting a bit with the sell-off last night. I think they took it as an opportunity to to sell into the strength. Europe was open strong, open really strong, and it just faded from about 7:30, 8 o'clock at night. It just continued to fade. So again, it looked like a bit of a sell the bounce play more than anything else. Now we're not obviously can't say whether it's over or not, whether the rally's over. But I think after this secondary move down, say on the Dow, especially the Nasdaq, we're down the previous lows. It's I'm on the 5-minute chart. All right with that. We're down the previous lows on the markets, Nasdaq. We're back down in that sort of support zone. Now that could hold up easy. The trend is down. I think this is a key lower high now, as opposed to this level up at 11,500. And there's a lot of fuel. There's still a lot of fuel built up on the long side. I've been saying that for a while, that if they get a bit of a run on, which was really is this if this level can hold and that break, which it did, now we start to get that retest and we're failing, which could be looking down to 10,300, which would mean another few hundred points, 500 points potentially tonight or the next couple of days. But I think the sentiment is changing. I think a lot of people are starting to realize once we get these COVID cases starting to increase again in Europe and potentially in the US, numbers starting to increase. That's going to put pressure back into lockdowns, which puts pressure in the economy, which stalls the growth. US Fed Reserve is pressuring the US government to hurry up and get some sort of stimulus plan. They seem to be reliant on that. Otherwise, growth is going to stall. We're going to go back into recession and the market's going to melt down. It's as simple as that. US dollar's grinding higher, which we were talking about, that 94 level, which it pushed above, and it's holding above there now, which is not a good sign. If you got gold tipped over, sent out an alert yesterday afternoon, which just beware, if it can't find support there, it could be some serious downside. Now it's right at a level now. It's not support, it's just a low, it's a previous low. The overall structure, if you go and look at spot gold, this big level in here, it's getting through there now, so it could be a bit of a flush of that zone. I don't see anything after that until we get down to 1800s, another $50, which you could do tonight. Everyone was talking up, be bullish on gold because of this, that, and the other. Problem is it's going down. They've been talking that up for a long time. It's buy the rumor, sell the fact, potentially. And we're not going to. It's no support from safe haven buying, which a lot of people are expecting. Buy gold because of the safe haven. Yet you can always be really, really early on trades like that. I mean, this thing, no reason why we got this massive pullback over time. If you go back to say even the daily chart, a lot of heat needs to come out of that market. You can't talk up, a break up through highs when you're well and truly stretched. The market needs to pause. It needs to find new buyers, and if it's not finding new buyers and not happy to buy it up here, it's going to go down. It's as simple as that. It doesn't matter what fundamentals or anything are saying. The market needs to put people back on the sidelines, recuperate, reset at lower levels, and then create the euphoria again. So, yeah, well, exactly. I think it's the case, and even that. That will obviously weaken the dollar, but it's like how much money can they keep throwing at the markets to provide support? I guess they can just keep the printer going. I mean, it doesn't really matter. That's just all. It's not real money. It's just paper money or tech money, I guess you could call it. So, but it doesn't seem to be, for some reason, the government is not um, doing anything about it yet. It's sort of come off the cards. Although I don't know how to say his name, but Munchkin is Mugen or whatever you say, is talking tonight. So there could be something that he's going to announce. I mean, just be wary that it's good timing from them. They see the markets come down. Okay, let's go and announce something. Let's do something to try to buoy these markets into the elections again. But either way, it just feels like to me that sentiment's changed. You've got that big pullback. Now, these zones they're not key zones. Key zones way down here. That trend up has had a big pullback on the longer term, big rally, big pullback, big rally. Now that could just be the start of a bigger move down. We don't know just yet, a bigger sell-off, which is going to, you could plow through that support. We could plow down to retest this level, below 9,000, which below 10,000, which is probably not such a big pullback. But if you start to, we get ahead of ourselves here, and people are starting to get concerned. Anyone that bought it up in this rally, even that more than likely bought it late to the rally, because people need lots more confirmation. When you get that sell off there and you start to rally, it's a bit of aggression to buy it off those lows. Yet as it's gone on, there's more and more people becoming confident with that rally, buying into the rally, buying late into that rally. They're potentially getting squeezed out. Just look at the Dow. Dow's failed at these highs and starting to break down as well. You've got the S&P, which pushed into new all-time highs thanks to the NASDAQ, which is breaking down. So there's not a lot of love. And I think after that, if you look at the intraday charts, this little pop here, okay, that was a bit of euphoria come back in. Then we got sold off last night. So that's why I'm skeptical that these markets not getting ramped, like the ASX getting ramped, potentially could be used as a bit of a hedge into the US. They're ramping the market during the day, selling towards the close or selling into the US. Who knows? Who knows what's going on? But it just seemed a bit suspect the way it a lot of strength into our market yesterday, which I don't see any particular reason apart from potentially a weaker Aussie dollar, which doesn't make a lot of sense anyway, because commodity prices with the strength in the US dollar are going up. Are going down. So however that situates all your bulls, we'll see. So let's look at the intraday action. Actually, sorry, just before I finish there. So we'll go over the dollar. Dollar's plowing higher. We've retested 94, popped up, retested, held. Looks like we're heading towards, a zone up towards 94.70, 94.80. The longer term trend is still down. It's still down. It could just pop up here, find some resistance, and then get sold off again. It's potentially just going up there to find, to see if there's another offer, some more offer zones up there, some more sellers around this level to start to move lower if you do get stimulus pop up soon and come into the market, then that's a good spot, better spot as any to start selling down from again, because obviously the increase in dollars is going to pressure supply, increase supply and pressure demand. So you would expect that's going to come back down only on the back of stimulus. Now I'm still sus that they're not interested in stimulus just yet. I don't know why, because that would be the key to get these markets back up again, or to give them support into equity markets. But again, we might just be looking at it going, why you continually support it? Lockdowns are coming again. You need people to start spending. They might be tightening their belts, especially the second time round. People are getting a bit sick of these going in the lockdown, coming out, potentially going back in again. They can't get a footing. It's going to hurt companies even more the longer they're in lockdown. It's going to hurt jobs more, I would expect. The longer it's, if the US goes back into lockdown, or Europe does, I think that's going to hurt it a lot more. So we'll see. But I don't think sentiment's too positive at the moment. You get the break up in the US dollar, so that's just going to pressure. If the markets start to cave in, it's going to be some really big, look at safe haven buying into the US, and there's a lot of shorts built up still. Longer term shorts are starting to square up because they're questioning everything. Yeah, exactly right. If the numbers keep going up, and they keep touting the numbers going up, they may not need to go into lockdown, but it's still going to crimp everything, because everyone's expectations are that we're going to go back into lockdown. Even if Europe just go back into lockdown, people are going to look at that, extrapolate that to the US if the numbers are creeping up, and sell off. So whether they do or don't may not be the key. It's just the fact that the idea that that's going to happen, that's going to create growth. See how the Fed last night came out and reiterated that they're not going to raise rates until you get above 2%, 2% at the minimum, potentially even let it go to 2.5% inflation before they look to raise rates because of what Evans, I think at Chicago, we were talking about this yesterday morning, Chicago come out, Fed Evans, what his name is, come out and said we could raise rates earlier. So the US dollar, well, everyone's gone a bit crazy and bounced. Markets have bounced. So it's interesting that they come out and sort of go, no, we are not going to do that. And I think a lot of people might have been waiting for more, the Fed to announce, more bond buying to support the markets, but they're not, which I think the market's starting to assess we are too high. Pretty much, I think that's the case. We're starting to assess, the markets have overshot the mark as they do time and time and time again. It's pretty much a foregone conclusion. You overshoot the market on the downside and you overshoot the market, overshoot expectations on the downside and on the upside. So if the market should be at 12,000, it'll go to 13. If it should be down at 11,000, it'll go to 10. Time and time again. So there's got to be that resetting. And I think that's what people are starting to realize now. They've overshot the market on the upside, on the NASDAQ, all the key indices, and there's going to be some profit taking. Now, if that profit taking turns around and there's enough negative news, which there is at the moment, we could start shooting on the downside again. So either way, expect the volatility to increase. Now we'll go over to the intraday. We've seen a bit of a sell-off spike down on the Dow, which is probably just going to flush this level. You would expect this level to be flushed. I don't technically expect that. I'm sort of expecting a flush. Then maybe a bit of, if it starts to lift again and we head towards 26,866, which is over 100 points from here, which you could do easy after that move down, and start to find that support around this level. I expect it potentially just to be pressured higher into the open of the European session. If, as a bit of a setup to bring in the bulls on the open and then slam them down again, if that could be the case. The markets seem to be doing that a lot lately. Like on the Hang Seng, for example, that sort of spike down. That's only CFD pricing, but that could be matching of where the expect in the open of the futures at 11.15. Open down, they see the open down and then buy it straight back up. So all your retail come in and slam the market, they hold it down, come into the open of 11.30 on the Hang Seng, which is the index. Everyone sees the US, sees the open, it's weaker than expected, let's bail, we're in a downtrend, and they bang it straight back up again and squeeze them all back out. And then potentially I'll be looking for that, obviously that weakness, just depending on where it gets squeezed to. So the opens are played with a lot, they're messed around with a lot. Let's see where the SPY has opened. It's opened weaker, so like I said, that move up yesterday may be well and truly ramped and a bit extended on the back of euphoria. So expect it to be a lot of people going to be hurting on the open today because they bought it late to the close, going, oh, we're up 100 points. I'm buying. This is the end of it. Your perpetual bulls, and stock traders can be perpetual bulls, which is unfortunate, but they could get squeezed out today. I don't know. It's just going to be interesting to see on the SPY or on the ASX, whether there's going to be support after the open, or whether there's going to be just that sell-off reversing yesterday's gains, which if you go to the actual physical index, that bit of a pump there, we've only merged back to the MAs and we haven't taken out that high from 16th of September, 59.58. Got a few points away, but I don't think we're going to be doing that today. So if we start to slam down and we take out the lows over maybe even today, coming days, it's going to be a bit of cause for concern. So where was I? I've got SPY down. Be interesting to see whether that, I would expect that's a big flush, and then we could pop back up to see what happens if that happens, or there's just going to be a straight sell-off to pressure people back out of the market. We've got the Nikkei, which was surprisingly strong. I mean, after this sort of ramp up last night, it was surprisingly strong into the close of the US session. It held up okay. It's opened down, and we're finding some buys again today. So whether they're just, for whatever reason, the Nikkei is bullish, I don't know. You've got resistance along here. You got some key resistance up here. You got some bigger support that's coming through. If you can extend that out here, it's touched on 1, 2, a couple of times through it here, rebounded off that level again. So some support in there. We'll see if that just starts to, if we bounce up here and we start to hold a lower level, expect this 23,154 to break. Again, that's going to depend on what the Hang Seng does. And down, we've gone over that. So just want to touch on the Hang Seng. The reason why I think there's going to be a bit of a flush on the open lower and then bounce is because everyone knows there's major support down here. Look at the futures. This is a key support zone. It's just ticked on through there, and it looks like it's going to gap potentially down on the open on the futures market, and that's why it could be a bounce. I'd be hard to believe it's going to gap down and just fly down, because otherwise you step, a lot of people can just set left on the sidelines. If we just gap down and go, but there is reason that it could do that. So look, you look at the daily charts. This market has been down, contraction back up, down, contraction back up, down, sell off, contraction back up. We're at the start of potentially this kind of thing, this kind of action, big sell off here. So we might get, like we see here, big push through this low, bounce, and then just a big sell off. That's what I'll be looking for. I wouldn't be surprised if we have a slight bounce and then a bigger sell off, and then it's all one way action. But if this breaks, it's a move down to 25, 1,000 points below, and then even lower than that down to these lows at 20,000, 21,000, which is 3,500 points or 2,500 points below where we are now, or where it closed. You look at the index. So in saying all that, there's a lot of room to move down, and this is not a key level as such. It's just a level they're starting to react up off. There's a lot of room to move on the downside. Now, this is the index. So this has been a bid zone before. It broke through, retested again. So it is a bid zone that's been holding. And that's, we reacted up off there. Just go to a shorter term chart. The index is was supported off there. Now the move down overnight is going to drag the index down on the open. You would expect we'll work that out coming into our live trading session at 11. Where roughly we could be looking at the open. We're going to get a clearer picture once it hits 11:15, and then 11:30 we'll see where it opens, but we can get a clearer picture of what the futures are saying 15 minutes prior. If they're looking to be opening around this level where it finished, let's just see. Let's have a quick look now. Hang Seng. Okay, got a 30-minute chart. So the stage of the open, the index was, oh, that's not the right one. There you go. So when it closed at 6 o'clock, we're trading up here at 6 o'clock. Yep, so we're trading up about this zone. So it's dropped another, what's that, 250 points, 250 points. And if it's going to open lower, you can expect this to be down to about 250 points. So if you sort of look at where it is, 733, down, it might flush out this low from yesterday, which it reacted quite savagely up. So expect it to sort of flush down. We might get a bit of initial weakness, and then it could pop. I'll be nervous about selling into the open because the potential to pop. Now, I'll be more looking for continued weakness. Obviously, if you bounce, you push down, look to see what the first pullback, if it's met with further selling, then we could have a good trend move down a lot lower. All right, guys, I'll call it a day there. I'll finish up there. So any questions, feel free to send us an email to support@tradesetup.com.au. Just our usual. Leave us a like on YouTube. If you haven't already subscribed, please do. And then if you don't know about the live trading channel, feel free to join in and send us an email, and I'll send you out a link to Discord, and you can join in the fun. It's always better, the more people we have, the merrier. Helps with a lot of things. Keep an eye on different markets as well, and create an opportunity. So any questions, send the email, and I'll speak to you soon. Cheers, guys. Bye.